Eric Mwather with Mwather.com. Let's take a look at the markets here. I just got your email asking about the volatility on the Nifty. And I think I can explain why the Nifty had a volatile session on Tuesday. But first, let's begin by taking a look at the Dow here. We've been trading for about 30 minutes. And the Dow is slightly to the downside. You can see here clearly that the Dow is down the most. S&P 500 follows, and then the Dow, and then the Nasdaq, excuse me. I want to show you, before I go to the Nifty, my thinking why this is the case, that we are getting a relatively big point drop as of right now on the Dow. Yesterday we had a big up day, as you can see, and that big up day, as I explained in yesterday's video, was because the Dow managed to move its daily RSI back above 50 here. Today we are looking at the exact opposite, in that the Dow is now pushing prices, actually let's say pushing the RSI back below 50, which opens the possibility for a big down day. It's just a possibility, increases, and it's all based on how the RSI is calculated. For you to move from above 50 to below 50, you need to introduce a big number into the average. And when you want to move from below 50 to above 50 on the RSI, you have to introduce a big number to change the RSI formula from below 50 or above 50, or vice versa. So that's the reason, in my opinion. And you can see also yesterday, let's take a look at the Nasdaq. Yesterday had a big session, and you can see it's because it's moved its daily RSI above 50 after closing below 50 on Friday. So the risk is that if the Dow cracks below 50 and eventually goes lower, if it can influence the Nasdaq to move below 50 either today or the next day or whenever, we're going to have a sizable drop in the market. As of right now, quick observation is the S&P 500, and you'll see that on the S&P 500 had a nice session yesterday, and now as it moved above 50 yesterday, just above 50 the close was, now we are moving below 50 for the day, opens up the possibility for a big down day. Now you might notice something here, S&P 500 down 0.53 because it is just now moving below 50 at about 48. So the movement in price is also explained by how much you are dropping below 50. The Dow is dropping below 50 the most. Let's take a look at the Dow. So the Dow is down below 50 the most, which is the reason why it's down the most in terms of percentage point. The Nasdaq is down the least because it hasn't moved below 50. Hope all that makes sense. So in my opinion, based on how the markets respond to the 50 level, you can gauge the direction. If the Dow can manage to move back above 50 on the daily time frame, then maybe this is not going to be a big up day or a big down day. So depending on how the Dow responds around the 50 level, if it moves back above 50 by the end of the day, this is going to be not as big of a down day as it could have been. But the fact that it remains below 50, in my opinion, suggests that this is a locked-in down day. So let's go to the Nifty after I've set the ball there, and we can see here on the Nifty, on the hourly, you started the day by moving above 50. So let me draw the 50 line. Let's draw 50 here. You started the day by jumping above 50 there, which was good for this huge session or huge 2-hour, 3-hour period. You dropped below 50 during the day, and remember, moving above or below 50 you get big swing. So you drop below 50. Where is that red? Okay, there is my red line, excuse me. Here there is the 50 level. You drop below 50 for a big point drop, and then close the day back above 50 for a good size gain by the end of the day. At the end of it all, you are up 1%, and that to me is the explanation. It's this movement above 50 then below 50, and eventually back above 50, that was, in my opinion, responsible for the market having a volatile session. So, of course, if we start the next day down below 50, expect a big hourly drop. So it depends on how markets go. But let me take a look here at the charts, and begin by taking a look at the hourly. And I think the hourly, in my opinion, is okay. You can see that the line we're talking about, connecting the lows generally, has held. I also see that now the MACDs have coiled and are looking to break this short-term high. If the MACDs can continue above that and recapture the 50 level, I think the market is okay, unless the MACD now turns around and stays below zero. If the MACD stays below zero, that could be a problem. Otherwise, in my opinion, also you can see that this line held, and also this line. As long as the market is above those two lines and they all come back to the previous level we talked about in the previous video, which is this entry and this entry, which correspond with this price movement here and here, which are the ideal entry levels over the last couple of months. So I think, generally speaking, it's not a bad market. That's what I would say. And also, depending on how it holds, if we take a look at the daily, so let's clear that, go to the daily, go back a little bit further, and we see that the daily it's okay. Keep in mind, we are trading at 48, so the daily has a chance, if it wants to move above 50. If it can successfully move above 50 on the daily RSI, you might have a big up day there. So we'll see what happens. Also, we have to keep an eye on this zero line, because the MACD is moving below zero is never a good thing. But we'll see what happens. The one thing I did like about the market after yesterday's move was the weekly. See the weekly here. And the reason why I say that is, as of right now, we are looking at the possibility of holding on this line that we were expecting support. So if the market can weave its way back above this line here on the weekly, just like it did here, nice lows, double bottom support on that level, nice lows. If it can weave itself back above that line, maybe now it's starting to build. The only problem is if that doesn't hold. So if the market turns down for the week, trades below that green line somewhere here, and also there was a line we drew connecting the lows. If this line doesn't hold, you can do it roughly like that. If this line doesn't hold, the black line and the green line, if both lines don't hold and the market is trading here, that could not be good. So we are stuck in that range. Volatility, in my opinion, was based on the markets moving above and below 50 on the hourly time frame. Otherwise, we will see how it can bounce. And I leave you here with the US markets trading over the last, let's call it about 45 minutes, still down for the day. Eric Mwathe, good luck, peace, and blessings. Woo!